Welcome to the New York section of SME, the Society for Mining, Metallurgy, and Exploration, an international society of AIME of more than 13,000 professionals serving the minerals industry in more than 100 countries. Today's symposium on December 8th, 2020 is titled Strengthening Critical Mineral Supply Chains in North America, featuring the key role of Quebec. This panel discussion you are about to listen to is titled Setting the Stage, Why are Critical Mineral Supply Chains Important to All of Us? The panel moderator is Chris Berry, founder and president of House Mountain Partners. The panel will now begin.
Okay, ladies and gentlemen, good morning, and thank you very much for joining us. As you just heard, my name is Chris Berry, president and founder of House Mountain Partners strategic advisory business based in Washington, D.C., actually focused on the energy metals space. I'm very pleased to be your moderator for about the next 45 minutes on a panel that is designed to really set the stage for the remainder of the event that the SME is kindly putting on. This is titled Setting the Stage, Why Are Critical Minerals Important to All of Us, regardless of where we are in North America, South America, anywhere in the world. It's obviously a hot topic, and we have put together a really, really good panel that I'm excited to hear from, a lot of different types of experience across the lithium-ion supply chain. And as you just heard, they were introduced, but just to make sure, any of you may have missed the intros. Sharon Mustri, metals and mining analyst with Bloomberg New Energy Finance, really here to talk about a lot of the concepts with respect to supply and demand, and really interested to see and hear what her clients are saying. Mr. Sid Subramani, principal at Hatch Advisory, going to get really technical with us today, I'm sure, Sid. And of course, Angelina Mehta, director of mining investment banking at Laurentian Bank Securities, here to talk, I think, about some of the details with respect to financing and bringing a lot of these projects to the fore as we work on building out the lithium-ion supply chain, again, both domestically and globally as well, really try and manage a lot of these changes. So, you know, maybe just to start off, a broad question for the panel. And, you know, Angelina, why don't we start with you, and then Sid and, you know, Sharon, feel free to chime in. But, you know, I think one of the sort of phrases of 2020, aside from COVID or pandemic or, you know, Zoom, is supply chains and self-sufficiency and decoupling. And so, you know, when we're talking about domestic critical minerals and those supply chains in particular, give us your take on the strategic significance. Why has it become such a buzzword, and what should we be doing about it?
Thanks, Chris. I'm really pleased to be here today. So I'm looking forward to this discussion here. Maybe just to be more specific, you know, it helps to have some definitions before we get going. And there is a difference between when we call things critical minerals and strategic minerals, for example. So if I could maybe give a flavor from a Quebec perspective, because I'm based in Montreal, I would say that, you know, the strategic element is around trying to put into place government initiatives, policies that are critical for the economy, and therefore gaining access to the critical minerals that are required to make that happen. So most of these minerals that we're talking about have, you know, a supply crunch around them, and can't be easily replaceable. And as a consequence, securing supply domestically is important. And then from, again, a Quebec perspective, you know, there's an abundance of these types of materials in the province. And so the discussion has been around how do we get that moving or accelerating given the current context.
Interesting. Sid or Sharon, any comments on, you know, why the buzz? Why does this matter? Why should we be focusing on this right now?
Sure. Thanks, Chris, and look forward to the discussion. I think what we're seeing with COVID is that the original issues that we'd felt around the inefficiencies in the supply chain just sort of heightened and hastened the problem to the forefront. You know, we've seen as just given issues around COVID and the amount of difficulty that many projects have had, or that are in construction, for example, to be able to get the supply chain, get their products away outside of China, for many of the key equipment, just to heighten the importance of diversifying their sources of these critical important minerals that go into many of these equipments. So I think the importance for any country, if you will, and we obviously looked at it from a Canadian perspective, is to look at alternative sources that at the end of the day protect the industry within a specific a country, an industry that is in many cases strategic for the growth of the economy. And so I think having diverse sources is something that a lot of companies are looking at with a different eye to an extent which they never looked at earlier. And I think COVID is really the issue or the flashpoint that triggered that.
So would you say then that sort of COVID, the effects of COVID, plus sort of lingering trade war between the U.S. and China, maybe some other factors, would you say that, I mean, what you're seeing, Sid, in your business, and of course Angelina and Sharon chime in, but I mean, is this a permanent change? In other words, have we passed the sort of point of no return where, yes, supply chains are going to regionalize, maybe it's higher cost in the long run or the near term, but at the end of the day, so, we can all sleep better at night, again, from a strategic perspective, whether or not we're just talking about Quebec or Canada or North America, is this permanent, or, will the tension between, for example, China and the rest of the world eventually die down and globalization will kick back up and we'll sort of do what we've done for the last 40 years?
Could I maybe chime in here? When I was talking about strategic policy, I mean, clearly a lot of it, and this is not unique to Quebec, obviously, is around environmental footprint, decarbonization, and these conversations had started well before COVID. So I look at COVID as an accelerator of securing the supply chain, or an excuse to maybe invest now rather than later to get these further down the chain.
Interesting. Sharon, I see you nodding your head. Any comments there?
Yeah, exactly. I was just about to mention that. I think for sure I agree with Angelina and Sid that supply security is going to be kind of the main factor impulsing more domestic supply chains. But there are benefits that will be long lasting even beyond policy changes. So shorter supply chains will lead to kind of cheaper materials usually, and then also lower emissions. It'll give you more control on how these materials are produced, and also importantly, give countries kind of more autonomy and ideas to create innovation across the entire supply chain and kind of make it more efficient.
Sure. Okay.
And just if I might add, I think
with all the elements involved.
Sorry, Sharon, we lost you for about that last 5 seconds, and Sid jumped in. So let's let him finish his thought, and then we'll come right back to you. Go ahead, Sid.
No, I think just to add to that, I think a lot of the permanence of this change really depends on your view of what's going on in the U.S. And whether these trade wars or the rhetoric around America First is going to continue or come back again in 4 years or 8 years from now. And with that, does that mean that a lot of companies have to ready themselves and prepare for themselves for this sort of instability, if you will? I think a lot of the last 30 years has been underpinned by the U.S. Having predictable policies, which if going forward, if that does change, I think you'll see a change of regionalization that could be permanent.
Okay, thanks. Sharon, we lost you for about 10 seconds there. Did you just want to finish your thought, or? No? Okay, no problem. Okay. Just wanted to give you the floor. Sid, you mentioned something that, I think is important, and I'm glad you did, because it's a great segue, really talking about policies and regulations coming from government in particular. And I think one of the biggest shifts that I have seen certainly in the last, not even the last year, in the last 6 months, is of course this newfound focus on ESG. This isn't just governments that I think are mandating these criteria anymore. I mean, yes, they're certainly the leaders, I would argue, but I think stakeholders along the entire supply chain have now woken up and realized that it's not enough just to produce lithium or just to produce cobalt or cathodes or what have you. It's got to be done in such a way that is, I would say, net neutral to the environment or beneficial, arguably. So again, question to the panel, and Sharon, why don't you perhaps start off on this one? But how does ESG figure into all of this? So with your work at BNEF, obviously there's a great deal of data and research, and maybe if you can just talk a little bit about what you're seeing from your perspective about ESG and its sort of longer term impacts.
Yeah, we think that ESG is going to be absolutely essential going forward. It's a big incentive for making supply chains more domestic, as we were saying, but we think absolutely for everything that's designed from now on, it'll be important to incorporate ESG from the very beginning. And we see this, like ESG requirements tightening, especially in the EU, where even just last week, they announced new responsible sourcing agreements for battery supply chain and requiring also kind of clean energy use. So we just think this is going to continue. And essentially for countries like Canada that have like very green power, that'll be a good sign and a good reason to invest there and develop the supply chain there.
Sure. Angelina, given that you're in Montreal, you want to comment on that? I know there's a lot of hydro up in Quebec.
Yeah, frankly, we're really well positioned to discuss ESG or our ability to deliver at a lower carbon footprint. However, I think the ESG conversation is bigger than just how these battery minerals are produced. It also ties to access to funds that are now available for companies that are producing or can demonstrate an actual change in footprint. It also is much broader than obviously just the battery materials themselves, right? I mean, ESG applies across the full mining cycle for all materials. But what I thought was a really good example, and they're quite good at marketing. One example in Quebec, for example, the Nouveau Monde graphite guys, not only are they aiming to produce something that will go into batteries, so that's ESG, if you will, on its own, but they're also talking about how their fleet will be fully electric, and we talked about how the electricity will be green. So there's multiple layers of the ESG conversation happening, and I don't think we should limit our conversation to just carbon footprint, because ESG is bigger than that as well. It goes to governance, it goes to hiring locally. It's obviously much broader than just environment. So I don't know if we have time on this panel to hit all the elements.
We can go deep here, but I just want to follow up on one thing, and then Sid, we can hear from you. Angelina, I hear what you're saying about utilizing green power and hydro and more sustainable sources. I mean, given your experience on the banking side, is a project that can sort of prove its ESG bona fides? I mean, is it eligible for lower cost financing, or is it a question of higher returns on the back end? I mean, how do you as a banker view the ESG opportunity?
So it is an opportunity, but I'm not sure we've been able to translate that into lower cost of capital yet. And I see a number of barriers. Some of it has to do with just the size of the financing that we need for small projects. It's actually not big enough to access the large funds that are providing funding. Secondly, at least in the mining space, and happy to hear other perspectives. When we talk about the delta or the change or the improvement in ESG, you kind of have to have something operating already in order to demonstrate a change in your footprint. And many of the projects that we talk about, or at least the ones that I'm directly connected to in Quebec, are kind of R&D in that they're still in exploration and development, so they don't have this pool of data against which we can measure a change, and therefore it limits its ability to access funding. So while I think the conversation needs to start, and it has started, I haven't seen an enormous amount of ESG funding pouring in, at least to the mining space. And maybe the final point I'll make, a lot of the funding that I've seen is really on the debt side, and you know, generally these junior mining companies are often looking for financing, at least for as equity in earlier stages. So that also is a bit of a challenge to overcome before we can get there. But I'm sure we're going to get there.
Yeah, debt's always a killer for the juniors. Sharon, comments?
Yeah, just to add to this point from Angelina, I think sustainable finance is going to be very important. We track it at Bloomberg, and recently it crossed the 1 trillion mark. So it's going to be, you know, a market that will be important and have a huge potential for mining to gain sources of financing. And then from the lithium perspective, we've seen some interesting ways of approaching it. So we believe, like, Livent issued a ESG associated kind of debt.
Yeah, the green bonds, right? Yeah.
Bond, green bond, and it was based on simply being part of the EV supply chain. So it didn't really have kind of stricter requirements like using clean energy or things beyond that. So it's something that could be scalable in theory to other lithium projects without being too stringent on how the lithium is being produced. You know, this has like good sides and bad sides to it, but essentially it sets a precedent for lithium to kind of enter this ESG finance market and potentially have new sources of financing.
Perfect. Sid, any comments here on ESG? What are you sort of seeing?
Well, one area where I think Canada, Quebec have an easier way to maybe support the supply chain by recovering critical minerals through recycling. We did see that in you know, the technology is improving. There are quite a few companies within North America that are focusing on not only recycling batteries, but also looking at recycling some of the critical minerals like vanadium and niobium that are used in the steel industry. So if that's possible, that's another way for North America to have a regional supply chain, or add those metals to the supply chain. Otherwise, which would otherwise come from outside.
Understood. And maybe let's stick with you, Sid. I know that you know, speaking about North America, Canada specifically, Hatch just completed a pretty robust, I think, study of I'll use my words and then you can correct me, but sort of the critical mineral potential of Canada. And I'd just love for you to talk a little bit about how that came about, and most importantly, what you found.
Sure. Yeah. So we worked for ISED within the government of Canada to support them on a critical mineral study. And in this particular case, we looked at 45 critical minerals that have been designated by the European Union or the US, and narrowed them down to 7 that we think could be something that Canada should focus on. It was basically selected based on the supply risk, the Canada's strategic advantage, the economic growth potential of these minerals, and really where Canada would be able to have a distinct advantage over others. Mm-hmm. And so the 7 that we ended up studying were technology materials such as rare earths. We looked at steel, so niobium, vanadium, and then we looked at battery metals, so lithium, niobium, nickel, cobalt, and graphite. So if we looked at all 7, the story is fairly similar across the metals in terms of the challenges for Canada's industry, but they're all at different stages of the development chain. And so there's some clear winners where Canada can sort of invest in and have have a policy. One thing that we need is a proper critical minerals policy within the government of Canada, following what our partners have done. And so the idea here was to support the government in developing that policy, finding out which areas where we think Canada has a distinct advantage.
Interesting. Angelina, of the seven, I guess the magnificent seven that Sid just mentioned, I mean, are you seeing these sort of opportunities out there with respect to financing? I mean, is this really, of the, I think you said 45 that you initially started looking at. I mean, what are you seeing out there right now from a sort of a financing perspective? What's interesting?
So, I mean, capital market, right? So what they care about probably, doesn't reflect on what we as a community, society, or government should care about and on the longer term.
Yeah.
What I can say, after the big gold rush this summer, if you will, there is significant interest around base metals. I know, Sid, you didn't mention copper, but, in my mind, that's as important to the battery list as nickel is. So I would say there's some interest in nickel. I think given that pricing for a lot of the other metals that you mentioned is so opaque, it makes it very difficult to generate interest from the typical capital market investors. And as a consequence, and I know, at some point we're going to talk about challenges, but maybe I'll talk about it now.
Sure.
The types of investors to fund these projects are not the same as the ones that are buying into the gold and the silver deals right now.
Mm-hmm. Or ever, arguably. I mean, in my experience, you've got the sort of the gold and silver crew, and they think a certain way about the world and view that market. And, I think, as we all know on the panel, and probably those of us watching this right now, I mean, lithium and cobalt is to your point, it's opaque and it's a very specialized market. And because, just with respect to lithium, you're looking at around a 300,000 ton a year market. Even though it's growing, like a weed, 2020 notwithstanding, it does make it challenging who beyond, the sort of the large Chinese strategic investors are going to fund these multi-$100 million projects. So very, very interesting challenge. I guess, I'm just trying to think about the best direction to go here. Maybe Sharon, we can start with you, and I know Angelina and Sid, I'm sure you have opinions on this as well, but just thinking about, how to build out these supply chains. Okay. Obviously most of the lithium ion supply chain exists in Asia today, arguably in China. What are some case studies? What are some milestones and some maybe guideposts that we can look at here in North America to say, here's a good case study of how to regionalize the supply chain or how to build it out. Does anybody on the panel maybe have a thought on that?
Maybe I can take a stab, Chris.
Sure.
Some of the history or examples that we could talk about in Canada, and of course I'm going to be more specific about Quebec. We haven't had a fantastic success track record, and I'm going to argue, and this is maybe to follow on something that Sid said about the different sizes of the market's availabilities for each of the metals that we talked about. We don't look at it as a macro picture, I don't think. I think many of the projects that have tried to go forward and failed has been a consequence of being in a silo and trying to behave like a typical mining company and get financed like a mining company without the benefit of having the typical investors that we talked about and the typical market that mining companies have access to. So I think one of the ideas or thoughts, and this is not an original for me, but it's just one of the conversation points is looking at it from a more holistic view. How do we partner up with a nickel company and a lithium company and maybe even a graphite company to make critical mass, number one, in terms of attracting capital, and a solution or a final product that makes a lot more sense for a specific kind of investor.
Sure. And any Sid, I know. Okay, Sid, let's give Sharon 1 second to just jump in here, and then I'll follow up with you because the direction I want to take this actually involves you as well. So Sharon, let's hear it.
Yeah, so from the mining perspective, I think we've had interesting kind of case studies in the US. They're still not fully kind of commercial, but seeing Tesla's offtake with Piedmont is pretty exciting, and having kind of a domestic source of lithium being verified as like good enough for Tesla is interesting. And then developing clay resources with Bacanora in Mexico, or with Lithium Americas in the US, is also going to be, you know, in the next few years, once they come online, an interesting case study for lithium development. Beyond that, I think for mining in the region for metals like nickel and cobalt, what we think internally in BNEF is that it might be better for the region to go kind of away from mining and more towards refining, which has, in our view, a stronger potential.
Yeah.
And the region can there benefit from kind of its stable, cheap energy, its cleaner ESG standards, and being, you know, having access to a lot of like digitalization and advanced manufacturing. So we'll see how that goes in kind of the upstream of the supply chain, but those are two directions that could be good potentials.
Interesting. I didn't think we'd get through a panel on critical minerals without naming Tesla at least once. So we've covered the quota. Anyway, Sid, on to you.
No, I think building on what Angelina and Sharon said, I think you know, from a supply chain, the value standpoint, the value is really in at least in the battery value chain, looking at the camp plants, the gigafactories. One thing that Canada can do is, you know, we have the nickel, we have the cobalt, get the lithium, and to Angelina's point, put them all together with an OEM or a battery supplier, and build that ecosystem for a camp plant, and located close to where the auto manufacturers really are at the end of the day. That could create a demand for the minerals that Canada basically has an advantage on.
You and I chatted offline about, you know, the auto business or the auto market and the steel market in particular. I mean, is if I'm understanding what you're saying, you're sort of saying you take a large domestic sort of North American OEM like a General Motors or a Ford or a steel producer, and whether or not it's, you know, the operation is co-located in Canada or wherever. I mean, how would you foresee a large OEM getting involved? Is it quite simply, you know, writing a big check and then being there for the offtake, or would you see, you know, a General Motors sort of backward integrating and getting into mining or getting into lithium refining?
Well, it depends. I don't want to speak to their strategy.
No, yeah.
It could be something, you know, it could be something that they could work with their suppliers. So we, you know, within Canada, we have Magna, we have great large auto parts suppliers. So working with them and to create this additional service or additional supply chain that they don't necessarily need to get from China. You know, everything, you know, China, Korea, Japan essentially dominate the sector at the moment. But the North American OEMs could essentially create this. Now, I'm not sure if it makes sense for GM to get into directly. I would think that they would have to partner with everyone along the value chain, starting from the miners to their suppliers.
Mm-hmm. And so, and Angelina, I see you just came off mute. Let me pop a question in here, which I think will add on to this, and I'd love to hear your thoughts on it, and also follow up to Sid. But, you know, look, this is a supply chain that needs patient capital, right? We know how long it takes to build a mine. We know cost overruns, et cetera, et cetera. I mean, how do you bring that patient capital in from an OEM, from a steel manufacturer, you know, a downstream player, when the sector is so prone to boom and busts? So Angelina, maybe if you want to dovetail on Sid, and then I'd love to hear your thoughts on attracting patient capital.
Okay, I know boom and bust, you know, that's another panel word or expression that we were bound to hit when we talk about mining. But I'm going to say 2 years ago at PDAC, the annual conference in Toronto that everyone's been to, it was the first time that I saw auto manufacturers wandering around and talking to companies that had battery element products at booths. And what I wanted to maybe add on to Sid's comments is that a lot of times they don't understand the supply volume, if you will. Like, you know, Tesla's not going to secure all the nickel it needs for the batteries it's going to build from one tiny junior mine. And then secondly, you know, there's an expertise vacuum as well. And so, you know, what we've seen, you know, for example, CATL, largest battery producer out of Asia, sprinkling all kinds of investments around the junior mining space, but not really understanding or maybe getting critical mass in any one particular metal or jurisdiction. So there's got to be some kind of intermediary, I think, or maybe it's an OEM, as you mentioned, to bridge that gap of both understanding the technical behind actually getting this thing to happen from a junior mine and the actual supply.
Mm-hmm. And so, you know, something just popped into my mind when I heard you say that. If, again, I'm sort of interpreting that as, we know we need the patient capital. We know there's a lot of dynamic growth here, but the industry, in terms of building itself out, needs a backstop. Okay. Mm-hmm. And that backstop, I mean, could be in some respects a provincial or a national government. Okay. And so, you know, one of the questions that I guess I'd like to pose to the panel now would be, you know, A, would you agree with that? Government is sort of the ultimate backstop. I know that flies in the face of Adam Smith and the invisible hand and so on and so forth. But, you know, is government the ultimate sort of guarantor of risk as we look to compete here? Is that proper? You know, I mean, obviously, again, these are questions that we're not going to solve in the time today, but I think that, you know, it's a question worth asking if we're looking at risk mitigation strategies as we build out the supply chain. How involved do you think government should be?
If you don't mind, I'll just make a quick comment.
Sure.
You know, Quebec, again, as a government, put out a statement at the end of October tied to their strategy for critical strategic minerals. They also talked about a budget of roughly $90 million that they would attribute, not in very specific ways as yet, but to kickstart or catalyze. And of course, the province has had a long history of supporting mining with the institutions that we have here. So that to some extent does mitigate boom and bust, but in this case in particular, it also catalyzes the investment. And they can't be the only investor, clearly, but as a banker, if you have a lead order coming from your government, it makes the rest of the conversation a little bit easier. Falls into place. Sid, comments?
Well, as part of the study, we spoke to various stakeholders in the value chain, and that was a message that was quite common. There was at least maybe not an expectation of direct government support or subsidies, but there was an expectation that the government would have to, at a federal level, that would have to do a lot more than they're doing at the moment.
Mm-hmm. Sharon, any comments there?
Yeah, I think there's definitely a role for governments to jump in and provide financing. And where we've seen this the most is probably the EU in the recent years. So for markets that want to scale as quickly as the EU wants to meet decarbonization targets, there is definitely a role for governments to provide. In their case, they're providing outright subsidies that are quite generous to develop things all across the supply chains, but they're focusing it more on kind of battery manufacturing or further downstream. But this is going to be very important to reduce kind of high barriers and high capex costs, and to get those markets kind of competitive and develop kind of the industry knowledge in those countries. So there is an important role for financing.
Sure. And perhaps funding R&D as well. I mean, is that fair to say that that's another sort of, I guess, pool of capital?
Exactly. Although, I mean, what we've seen recently is there's a lot of really good R&D things happening, for example, in North America, but it's very different to just fund that side of things or have a lot of startups that aren't applied directly in manufacturing within the region. So it's good to have those kind of go together and pair them together within the country and the country supply chain so that they learn from each other rather than operating kind of in isolation.
Makes sense. Makes sense.
Just to add to that, the support the government can add is not just monetary. It could, there could be a lot of support in terms of championing the ESG nature of our metals, the sustainably sourced metals, and also help us or help this issue with raising the standards, the labor standards, the environmental standards, in China or across the world. It doesn't necessarily have to have a financial perspective, although that's equally important. But I think there's many levers that the government can play.
Interesting. Agreed. And so, look, you guys, as I started off the panel, I was saying how you have a lot of different experience, both personally and professionally. And of course, you have a lot of different clients that you're speaking with across the supply chain. And I'm just curious if, you wanted to share, I mean, what are you hearing from your different groups of clients, given everything we're talking about today, the challenges and the opportunities of building out a critical mineral supply chain? I mean, is there optimism out there? Is it sort of pessimism and we just roll our eyes and say, here we go again? I mean, what's kind of the take from some of the clients that you're working with? Angelina, maybe you want to start us off on that one? I know that junior miners are eternally optimistic, but maybe, a little more detail would be great.
Look, I think there is a lot of optimism, and I think it helps when a lot of the conversations circle around ESG. So, certain projects that kind of have been laying dormant for a long time are kind of becoming revitalized. But then it goes back to, a couple of points that we talked about before, right? There needs to be a certain critical mass in order to attract a different kind of capital. There's definitely, at least, in my experience, a number of private equity groups that have some more of that patient money that we were referring to earlier, that is particularly in Quebec, have stepped in on several projects. I know when I was on the private equity side, we had a big battery metal strategy with respect to pairing up, lithium and lead and a couple other products that made a lot of sense longer term. So there is optimism. There's more and more funds, as we talked about, that are geared towards battery metals from all kinds of financing angles, not just equity, but streaming, royalties, and debt, as I mentioned. So I am hearing and seeing a lot of optimism. I still am waiting probably to see maybe more tangible proof of projects being restarted and development happening and production beginning.
And do you think that's dependent on commodity price, or what do you think the trigger for that is?
I think it is a critical mass. I don't think it's commodity price, frankly. Some of these projects should be private. Most of them should be private. So it's really about aligning the interests and timing. And as we talked about earlier, COVID was an accelerator for these conversations. So it's aligning of all of these factors.
Great. Sharon, what's the inbound to BNEF looking like these days?
Yeah, I kind of agree with Angelina. So perhaps counterintuitively this year, despite having a lot of challenges, it kind of increased the optimism within the industry. So on the demand side, we've, I think, become more confident of not only like more demand coming online, but it coming online really quickly, and the need to kind of organize supply chains accordingly and not just kind of let it happen as it will. So we get a lot of questions on that, like how supply chains are organized now, how they should be. And then another thing that has been interesting to see this year is a lot more inbound questions from kind of OEMs being more careful about how they kind of source their materials and developing perhaps more complex strategies of how to collaborate within their supply chain. So that has also been, very interesting, and I think will continue to become more important and develop.
Interesting. Sid, any comments on sort of what's inbound at Hatch these days and what your clients are saying? Optimism, concerns, anything like that?
Well, I think, overall industry sentiment has improved quite a bit over the last 3 years. I think the low point was 2014, 2015. But I think what COVID has done is it's probably created some uncertainty over what was going to happen in the medium term. At least, I'm based out of Chile, and Chile has its own social issues in addition to what's going on with COVID. So we're not sure if many of the projects that in the copper projects that the clients are going ahead with will be going ahead in the medium term. Definitely in the long term, I think, but in the medium term, there's going to be a pause and wait strategy until they find out what's happening with the changes in the country. Outside of copper, the sentiment obviously changes metal to metal.
Yeah.
I think, or in the lithium space, I think generally people have a long-term view. Yes, the prices are low, but the juniors are still, like you said, optimistic, especially the ones here in Argentina. But I think what we've seen overall is, as an industry and all of our clients, while we're not back into boom days, and I'm hoping we never reach the euphoria days that we used to have, because it's just not sustainable.
Right.
There is cautious optimism, but I think that's been a term over the last 3-4 years. But in this particular case, it's
another phrase that always rears its head in these types of. But sorry, go ahead. I didn't mean to interrupt.
No, absolutely. But I think depending on the metal, like I said, there's clients who are investing. They're just putting a pause on their decisions at the moment.
Mm-hmm.
Over the short and medium term. I think long term, many of them will continue. So generally, I would say optimistic.
And I mean, just in terms of jurisdictions, I mean, obviously we've talked a lot about Quebec and Canada today, and you just mentioned Chile. I mean, what are some of the other, I guess, are there any other surprises out there in terms of how things are shifting? Are there some jurisdictions that you're seeing that maybe, in historically weren't necessarily top tier or first choice, and all of a sudden, people are giving them a second look? Or is it, are we always going to think, Chile and copper, or Chile and lithium, DRC and cobalt? I mean, you see any changes like that at all in terms of increasingly popular jurisdictions?
Can I mention one?
Sure.
Greenland had a bit of a spotlight on it. Was it a year or so ago when the U.S. claimed that they were going to try to buy it?
It was like we were going to trade it for Puerto Rico or something.
Either way, they do have rare earths, critical elements in Greenland, and they've had very pro-mining government, generally restricted from an infrastructure perspective, and limited season for progressing projects. However, I think it is, in my mind and experience there on several projects, a good jurisdiction that's sort of into the limelight a little bit more than it used to be.
Great. All right. Listen, we are just about out of time, as is the case when we start throwing around cliches like cautious optimism and things like that. Time does tend to fly. And so I guess what I'd like to do is one final question for each of you. Maybe just take a few seconds or a minute. What is the one thing or the one data point that you would want to leave anybody watching this with today? In other words, we're all talking to clients. We all know where this is going with respect to EV demand and penetration and what it means longer term. But, maybe it's something that you think people are missing. What is one idea or one data point that you'd each like to leave with us today? I don't know who wants to jump in first on that one. Sid, you want to give it a shot?
Sure. I mean, maybe this is less of an actual data point, but I think
just an idea, a thought, something that you don't think the market's necessarily grasping and you'd like to leave it with.
Well, one thing I think we that's not as appreciated is if we look at what some of the other policies, some of the other governments have done with respect to their policies and procedures, we don't realize how far advanced and how faster and easier it is for projects to get off the ground. So in a simple lithium carbonate conversion plant, if we were to do a environmental process for that, anywhere in North America, might take up to a year to 2 years. In South Korea, that process alone for permitting and all that can be as fast as 6 months or 8 months.
Wow.
That completely changes or has a significant impact on the decision on how quickly you can get up and going.
For sure. Excellent. Thank you. Angelina or Sharon, any wisdom you'd like to leave us with? Anything at all?
Well, when you said data point, I thought, oh, I'll finally be able to use this bit of research that I was doing to prepare for
Excellent.
this panel, Chris. So I went up and I looked up this statement from Wood Mac. They just put this out in October. They said that more than $1 trillion of investment will be needed in key energy transition metals. So we're talking bigger than batteries, but aluminum, cobalt, and then we talk about copper, nickel, and lithium over the next 15 years to meet the demands that they're seeing, right? And apparently it's double the figure invested over the previous 15 years, which makes it enormous. But then you match that up against, and we talked about pricing earlier, but match that up against prices for most of these metals that we talked about are below long-term incentive levels. So what does that mean? Thought that was very interesting.
Going up. Great. Sharon, any final thoughts?
Yeah, I guess just to give a bit of a different perspective, one thing I'm very excited about is how much innovation and technology is going into the space. So kind of, as Angelina mentioned, there's a lot of investment needed. It's going to grow really quickly in all different kinds of axes, from mining to cathodes to battery manufacturing. So something I'm very excited about is basically that every month there's like a new update and just keeping track of all the technology that's going on, not just kind of the market prices and supply and demand, but all the things that we can still do to make this kind of greener, more efficient, and actually meet the demand that's coming.
Terrific. All right. Well, we will end on that sunny and positive note. Just wanted to say thank you, Angelina, Sharon, and Sid, for your time and your thoughts today. And also thanks to all of you watching this, and thanks to the SME for hosting and putting this together. Hope everyone has a great rest of the conference.
Thanks.
Thank you.